Okay, thank you for having some interest in talktojosh.net and mortgage loans. Today we're going through every loan type. Today we're going to talk about a loan type called a HELOC. You say, Josh, what does HELOC stand for? I've heard it before, but what is it? It's a home equity line of credit. It's popular for things like remodeling and consolidating high interest debt. It's even a nice tool to have as an emergency fund. I don't really like to just have a lot of money sitting in a savings account or a checking account. I like to put my money to work. So I keep a HELOC with a good balance. with a good lending potential, zero balance as often as possible. And I can use that for my emergency fund. I need to buy something. If I need to buy a rental property, I can write a check out of my HELOC. It's a tool that's there when you need it. You can use it for remodeling, refinancing. I'm talking about refinancing credit card debt or other high interest rate debts. Now, there's some caveats to HELOCs. You need to be real careful. They're a great tool. I'll tell you more about how they're a great tool in other videos. But in this video, I want you to just understand that it can be dangerous. It's a revolving line of credit where you're borrowing money against the equity in your home, okay? So it's a big deal. It's a serious endeavor, but it's a smart tool if you know how to use it. So it's similar to a credit card, but it's actually a second mortgage. You have your mortgage on your home. A HELOC is usually, it's a second mortgage. Now, my HELOC sits in the first place because I don't have a first mortgage, but it's still considered, it's like a second mortgage. Okay, typically the lending period is set. It could be any random number of years, but it's typically 5 to 10 years, maybe more. And you can borrow against it over and over. You can, like a year or so ago, I wrote a check for, I don't know, I spent $30,000 or $40,000 remodeling a house. And then when I sold that house, I paid off my HELOC. So if I wanted to use it again, I could go out and buy another house, write a check, buy a house with my HELOC. It'd be like a cash purchase to the seller, but to me, I would be borrowing the money. I've already done all the lending steps. I've already had my home appraised. Yes, usually HELOCs require appraisals. I've already gone through the debt to income hoops and all of that stuff. And so now I've got this fund sitting here ready to write a check from. Okay, so it can be borrowed on over and over. It's usually a variable interest rate. It's tied to prime. It's got a margin. And so that rate can vary over time. It's calculated on simple interest on the balance used. So that means if you borrow $5,000 on the 15th of August and you pay it off on the 23rd of August, you're charged interest based on that daily rate for those days you had that mortgage. That loan. So the beautiful thing of a HELOC is simple interest versus, compound amortized interest that you have in normal loans. So in a normal mortgage, the amount of interest that you're paying goes down each month, and the amount of principal you're paying goes up each month. It's a little bit different in a HELOC because it's based on the exact amount that day of, it's the way all mortgages used to be years ago. We'll talk more about that in other videos, but you need to know what a HELOC is if you're going to understand some of the more complex ways to save money and pay off your interest rate quick. But it's a daily interest calculation. That's all you need to know about a HELOC is that it's a home equity line of credit. It's charged on a daily interest amount. It can vary. That interest rate does move. It's for disciplined borrowers. It can be dangerous if you're not disciplined. The reason it can be dangerous is because it's like a big credit card with the equity. It's tied to the equity in your house, and so you can just use it. You can use it for free, vacations, shopping, eating out. And before long, you've racked up a balance and you didn't realize it. So be careful with HELOCs. If you're using it as a tool, great. If you're using it on your normal splurge expenses, not a good idea. It can be dangerous. Okay, so I offer HELOCs. I also offer HELoans. They're a little bit different. I'll tell you about HELoans in another video, probably long in the future, but I want you to just know if you need help, you can email me questions at joshlive@talktojosh.net. or you can apply for a mortgage at talktojosh.net. You can apply for a HELOC there too. There's all kinds of things we offer. If you need some help, you need some assistance, you need some guidance, reach out. I'm doing all kinds of things real estate related here in the Catawba County, North Carolina area. So if you need me, if you need a plumber, you need an electrician, you need a contractor, call me. I can point you in the right direction. Would love to help you with all things here in the Catawba County, North Carolina, Hickory, North Carolina area. You hear my phone going off. I'm sorry, I should have muted that, but you get the idea.